Welcome back to News 19 This Morning. Well, for the past week, we've been telling you about the Federal Reserve cutting interest rates by 0.5 percentage point. This is a big deal since it's the first cut since 2020. But what does this mean for you? So we're on your side this morning with Jana Morrison, who is here to break down what we need to know about this change and the impact this could have on future big purchases. This is a really big deal. I feel like we've been talking about it for several days now. So Jana, you are here to break it down. What does this mean for savers and then borrowers?
Okay. For savers, it is probably not good news.
Interesting. Yeah.
For borrowers, it is good news.
Okay.
And so this is the first rate cut that we've had in about 4 years. Mm-hmm. And so if you are a saver, then of course you can't get the high interest rates that we have enjoyed recently on Treasury notes, CDs, money markets. But they're coming down slowly, so it's not like a huge decrease all at once. For borrowers, it's really a great deal because mortgages are higher now than they've been in a while. And so we can start to see those rates come back down. And
also, this might not be the only rate decrease we might be seeing. What, 1.5 by the end, possibly in 2025? How does that work?
Possibly. Nobody really knows, but the Fed meets 8 times a year. Mm-hmm. They will meet 2 more times this year, so possibly 0.25% each of those times. We don't know for sure, of course, but that's what we're thinking. And then next year, maybe when they meet, maybe another 1% next year is what everybody's thinking.
So then you also talked about mortgages. What about for credit cards? So what should we do? How is that going to affect us?
Credit cards have more of a variable rate, and so the effect for the rates decreasing are felt more quickly.
Yeah.
And so it'll start coming down quicker for credit cards, but very, very slowly. And rates rise so quick that they come down very, very slow.
I was going to say, it's really, really quick at there.
Yes.
So your best advice for savers, what should they do?
For savers, I would say go ahead and lock in your rates now. If you like to be invested in fixed income, such as treasuries or that sort of thing. However, it could be a good time to start investing in dividend-paying stocks. Just shift a little bit, possibly a little more risk, but shift a little to the stock market. So it could be a good time for that.
Okay, so this is now a good time to probably capitalize in if you got a lot of stuff there in the money markets.
I would say so. And mortgage rates, if you were thinking about refinancing, if you've bought a house in the last couple of years, now, because who knows how much lower they'll go and when that'll happen. And if they do go lower, you can refinance at that time.
Right over there. Jana, thank you so much. We always appreciate it. This is going to be really good. And so there's a lot of tips here. We'll be putting this on our website, WLTX.com, so you can always refer back to this. But for now, we're going to go ahead and send things over to meteorologist Daniel Bonds.